Federal Reserve threats to freeze rates, stocks, and housing decline? Welcome back to Ace Wealth Strategies. We're your trusted guide in the world of finance, wealth, and money, your go-to channel for unlocking the secrets of building wealth. Whether you're just starting out or looking to level up your financial game, we've got you covered. From beginners to seasoned investors, we're here to help everyone navigate the path to financial freedom. Today, we're diving into a hot topic that's buzzing everywhere: the Federal Reserve's decision to keep interest rates steady and what it means for our homes, savings, and investments. Join us as we dive deep into the Federal Reserve's latest buzzworthy announcement on their consideration to hold interest rates steady. Witness the dynamic dance between the stock market and safer investment avenues and unravel the mysteries of its impact on our vibrant housing market. Whether you're a stock enthusiast or a homeowner, we've got tailored insights just for you. Navigate this financial journey with us, and let's decode the opportunities that lie ahead. Gear up for a thrilling exploration of the financial world, all served with a touch of professionalism and a sprinkle of friendliness. Navigating the world of finance can often feel like trying to solve a complex puzzle, especially with all the buzzwords and jargon thrown around. But don't fret. Whether you've heard of them in passing or have been trying to wrap your head around their latest moves, we're here to simplify it all. Ready to embark on this financial journey with us? Let's set sail. What's the deal with the Federal Reserve and these interest rates? Imagine the Federal Reserve as the nation's money manager. They have a big lever called interest rates that they can move up or down. In essence, the Fed acts like a thermostat trying to keep the economy's temperature just right. This lever affects how much it costs to borrow money. If they think people are spending too much, they might push the lever up, making borrowing more expensive. If they want to encourage spending, they pull it down. Lately, they've decided to leave this lever right where it is, signaling they're trying to keep things steady. So, what does this mean for the stock market? The stock market is a reflection of economic sentiments and investor confidence. Think of the stock market as a giant seesaw. On one side, you have stocks, and on the other, you have safer places to park your money, like bank accounts or bonds. When borrowing is cheap because of low interest rates, companies can grow and expand, making stocks more attractive. This growth can lead to increased job opportunities and innovation. But when the Federal Reserve decides to keep things steady, it can make people wonder about the health of the economy. Investors might start to wonder, is the economy not as strong as we thought? This doubt can lead to a dip in stock market confidence and potentially lower stock prices. The stock market is not just a place for buying and selling shares. It's a barometer of economic health and sentiment. Every decision, big or small, can have a ripple effect on the market's direction. The stock market's volatility can sometimes be daunting, but it's essential to remember that it's a natural part of the economic cycle. And what about our homes? Why are housing prices affected? Homes are more than just buildings, they're investments and memories. When interest rates are low, it's like a sale on borrowed money. This can mean more people rushing to buy homes because their mortgage payments will be lower. It's an opportunity to own a piece of the dream. But when the Federal Reserve hints at keeping rates steady, it can make people pause and think. It's the classic law of supply and demand. If demand decreases, but supply stays the same or even increases, prices tend to go down. Real estate is more than just property. It's a reflection of societal trends, economic health, and individual aspirations. The housing market doesn't operate in isolation. External factors, from global economic trends to local employment rates, can influence housing prices. As homeowners or potential buyers, understanding these dynamics can empower individuals to make decisions that align with both their financial goals and market realities. Quick time out, dear viewers. If you're finding this easy-to-understand breakdown helpful, show us some love. Click subscribe, hit that like button, and ring that bell for notifications. We're here to make finance simple and fun for you. All right, I've got stocks and a home. What should I do now? Firstly, congratulations on your investments. For those with stocks, remember the seesaw. It's all about balance. If you have a mix of stocks and safer investments, you're better prepared for ups and downs. Think of it like not putting all your eggs in one basket. Diversification is key. And if you're thinking of buying or selling a home, do your homework. Look at local housing prices and maybe consider waiting if you're not in a rush. Having both stocks and real estate is a testament to your investment acumen. It's essential to periodically review your investment portfolio and real estate holdings. Market conditions change, and what was once a lucrative investment might need re-evaluation. How can I stay ahead with all these changes? Knowledge is power, especially in the financial world. The best way is to keep learning and stay informed. Think of it as keeping your money muscles fit. Staying informed, seeking advice, and keeping a long-term perspective can help smooth out the ride. Read up on finance, watch videos like ours, subscribe to Ace Wealth Strategies, and maybe even consider chatting with a financial expert. In the ever-evolving world of finance, adaptability is key. While it's essential to stay informed and educated, it's equally crucial to be flexible in your strategies. The financial landscape can change rapidly, and yesterday's winning strategy might not be as effective tomorrow. Before we wrap up, a shout-out to our amazing community. Your support and engagement drive us to deliver top-notch content. If you're enjoying our easy breakdowns, give us a thumbs up and share with friends and family. Zooming out, what's the big takeaway? The world of money and finance is like a giant puzzle, with pieces always moving and shifting. The Federal Reserve's decisions are just one piece of that puzzle. In a way, the Fed's decisions send ripples throughout the economy, touching everything in their path. While they play a big role, many other factors come into play. The key is to stay curious, keep learning, and remember that it's a long game. In the grand scheme of things, financial literacy is a lifelong journey. Every decision, from the Federal Reserve's actions to an individual's investment choices, contributes to the intricate tapestry of the global economy. It's a world where every piece matters, and understanding how they fit together can provide invaluable insights. With the right knowledge and a bit of patience, you can navigate the financial seas like a pro. Embrace the journey and stay proactive. And that's our deep dive for today. Remember, finance doesn't have to be complicated. With the right information and a curious mind, you can master the money game. While the Federal Reserve's latest move has certainly stirred the waters, it's also opened up a world of possibilities and opportunities. Remember, every cloud has a silver lining, and in the financial realm, knowledge is your compass. Stay tuned with us for more exhilarating updates and expert insights. Together, we'll navigate these waves and set sail towards a prosperous future. Thanks for joining us on this thrilling ride, and until next time, keep investing, keep dreaming, and keep shining. Cheers to a brighter tomorrow. Loved our episode? Support us with a thumbs up, share the knowledge, and make sure you're subscribed for more fun and simple financial insights. Let's make finance easy together.